Imagine waking up one morning and realizing the world you trusted is quietly falling apart. Not with bombs or armies, but with numbers, with debt, with money losing meaning. This has happened before, to the Roman Empire, to the Spanish Empire, to the British Empire, and many historians believe the same warning signs are flashing again today. The scary part? Most people don't notice until it's too late. In today's video, we're breaking down the 3 financial signals that appear before almost every empire collapses, and why ignoring them has never ended well. Before we go any further, if you care about understanding money, power, and where the global economy might be heading next, make sure you like this video and subscribe to the channel. It really helps empire economics grow, and it tells the algorithm to show this content to more people who actually want to understand what's happening behind the scenes. Now, let's start with a simple truth. Empires don't collapse overnight. They rot slowly from the inside, and the first place that rot shows up is always the financial system. Thousands of years ago, Rome was the most powerful empire on Earth. It controlled trade routes, armies, and resources across continents. To the average Roman citizen, Rome looked eternal, strong, unbreakable. But behind the scenes, the numbers were telling a very different story. Rome's first major financial warning sign was massive government spending fueled by debt. Wars were expensive, armies needed to be paid, infrastructure needed constant repair. Instead of slowing down, Roman leaders kept expanding, assuming future growth would cover today's costs. Sound familiar? At first, debt didn't feel dangerous. As long as Rome kept winning wars and expanding territory, new land and taxes flowed in. But eventually, expansion slowed. The costs stayed high, but the income stopped growing. That's when the cracks started forming. This is the first financial signal that appears before every empire collapses. Runaway government debt that grows faster than the economy itself. Debt isn't always bad. Every modern country uses it. The problem starts when debt becomes the only way a government survives, when borrowing money is no longer used for growth, but simply to maintain the illusion of stability. Rome crossed that line, and instead of fixing the problem, leaders chose the easier path. They started printing money. At first, Roman coins were made of nearly pure silver. People trusted them. They held real value. But as debt increased, emperors quietly reduced the silver content in coins while keeping the same face value. To the public, nothing looked different. But over time, prices started rising. Goods became more expensive. Savings lost value. This brings us to the second financial signal: currency debasement and inflation. When governments can't pay their bills, they often choose inflation over honesty. It's a hidden tax, no vote required, no announcement needed. People just feel poor without fully understanding why. Rome did this for decades. Each new emperor reduced the silver content a little more. Eventually, Roman coins were mostly copper with a thin silver coating. Trust collapsed. Trade slowed. Soldiers demanded higher pay. Farmers stopped bringing goods to market. The empire didn't fall because of one bad decision. It fell because leaders kept choosing short-term comfort over long-term stability. Now fast forward a few centuries to the Spanish Empire. Spain struck gold, literally. After discovering massive silver deposits in the Americas, Spain became insanely wealthy. For a while, ships loaded with silver flooded into Europe. On paper, Spain was richer than any empire before it. But something strange happened. Despite all that silver, Spain became weaker. Why? Because easy money destroys discipline. Instead of building a strong, productive economy, Spain relied almost entirely on imported wealth. The government borrowed heavily, assuming silver shipments would never stop. Inflation exploded across Europe. Prices rose faster than wages. Spain defaulted on its debt multiple times. This shows us something critical. It's not just debt or inflation alone that kills empires. It's when both combine with declining productivity. This is the third financial signal: a weakening real economy masked by financial tricks. When an empire stops producing real value and starts surviving on financial engineering, it enters dangerous territory. Spain had gold and silver, but it lacked strong industry. Rome had land and power, but lost trust in its currency. Different eras, same pattern. Now let's bring this closer to modern times. The British Empire followed a similar path. At its peak, Britain controlled global trade, shipping lanes, and finance. London was the financial capital of the world, but maintaining that empire was expensive. 2 world wars drained Britain financially. Debt skyrocketed. The pound lost its dominance. The empire slowly dissolved. Again, no sudden collapse, just a steady decline. Today, many people believe this time is different. Technology is better. Systems are smarter. Governments are more advanced. But here's the uncomfortable question. Are we really different? Or are we just repeating the same mistakes with better marketing? Modern economies rely heavily on debt. Governments borrow trillions. Central banks create money digitally instead of minting coins. Inflation is explained away with complex language. Asset prices rise while everyday people struggle. The The warning signs aren't hidden, they're just normalized. Think about this. When inflation rises, we're told it's temporary. When debt increases, we're told it's manageable. When money is printed, we're told it's necessary. That's exactly what Roman citizens were told, exactly what Spanish merchants believed, exactly what British taxpayers accepted. Empires don't collapse because people are stupid. They collapse because the system trains people to ignore reality. If you're still watching, you already understand something most people don't. And this is why channels like Empire Economics exist. Not to scare you, but to help you see patterns before history repeats itself again. In the next part, we're going to connect these historical signals directly to the modern American economy. We'll talk about the dollar, debt levels, asset bubbles, and what usually happens next when all three warning signs appear at the same time. Before we continue, take a second to like this video if you're finding it valuable so far. It helps more than you think. And if you have thoughts already forming in your mind, hold on to them. Because near the end of this video, I'll ask you a question that might change how you see the future. Now let's talk about the present, because history only matters if it helps us understand what's happening right now. The United States is not Rome, it's not Spain, it's not Britain, but the financial signals we're seeing today look uncomfortably familiar. America currently carries the largest national debt in human history. Trillions of dollars. Numbers so big they almost stop feeling real, and just like Rome, this debt didn't appear overnight. It built slowly, year after year, crisis after crisis. Wars, recessions, pandemics, bailouts. Each time, borrowing felt like the easiest solution. At first, debt helped fuel growth. Infrastructure expanded, technology boomed, living standards improved. But over time, something changed. Debt stopped being a tool for growth and started becoming a requirement just to keep the system running. That's the danger zone. And when a country needs new debt just to pay interest on old debt, the math stops working. And the only way to delay the consequences is through money creation. Unlike ancient empires, modern governments don't clip coins or melt silver. They print digitally. With a few keystrokes, trillions of new dollars can be created. On paper, it looks clean, no smoke, no fire. But the effect is the same. More money chasing the same goods means prices rise. We've all felt it. Groceries cost more, rent is higher, healthcare is expensive, education feels out of reach. Official inflation numbers might say one thing, but everyday life tells a different story. This is where trust starts to crack. In every collapsing empire, people eventually stop trusting the currency. Not all at once. Slowly. They spend faster. They invest in hard assets. They speculate. They chase returns instead of building value. Sound familiar? When saving money feels pointless and speculation feels necessary, something is broken at the core of the system. And here's the part most people miss. Inflation isn't just an economic issue, it's a social one. It quietly transfers wealth from savers to debtors, from workers to asset holders, from the young to the established. That imbalance creates tension. And tension eventually turns political. Rome saw this, Spain saw this, Britain saw this. Economic stress always comes before social instability, not after. Now let's talk about the third signal again, because this one is the most dangerous in modern times. A weakening real economy hidden behind strong financial markets. Stock markets hit record highs. Asset prices soar. Headlines talk about prosperity. But underneath, productivity growth slows. Manufacturing declines. Small businesses struggle. Wages fail to keep up with costs. This creates an illusion of strength. In late-stage empires, financial markets become disconnected from everyday reality. Paper wealth grows while real-world stability shrinks. It feels good until it doesn't. Spain had silver. Britain had global trade dominance. Rome had land and armies. America has the world's reserve currency. And that last part is critical. The dollar's global role has allowed the U.S. to delay consequences longer than any empire before it. When other countries need your currency, you can export inflation. You can borrow cheaply. You can run deficits without immediate collapse. But history shows that no privilege lasts forever. Reserve currencies change. Power shifts. Slowly at first, then suddenly. This doesn't mean America collapses tomorrow. That's not how history works. Empires don't fall off cliffs. They slide down slopes. The real question isn't, will history repeat? The real question is, how prepared are people when it does? This is where individual awareness matters. Empires fall, but people who understand cycles adapt. They focus on skills instead of promises. They diversify instead of trusting a single system. They question narratives instead of blindly accepting them. That's why conversations like this matter. That's why empire economics exists. Not to predict doom dates, but to help you think clearly while others are distracted by noise. If you've made it this far, you're already ahead of most viewers. And I want to hear from you. Do you think we're seeing the early stages of another empire-level shift? Or do you believe modern systems have finally broken the historical cycle? Drop your thoughts in the comments. I read them. And strong discussions help this video reach more people who are searching for real answers. If this video helped you see history and money differently, share it with someone who still believes this time is different. Sometimes one conversation is enough to change how someone views the world. And if you haven't already, make sure you're subscribed to Empire Economics, because the most dangerous time in history is when people stop asking questions, and the safest place to be is among those who still do. Thanks for watching.